Credit is moving with conviction, and specialized assets are drawing institutional capital at scale. Good morning, this is the CRE360 Signal Daily Brief for November 14, 2025. Here's how real estate capital is moving today. Let's start with a major institutional play in student housing. Morgan Stanley, Real Estate Investing and Global Student Accommodation have just closed a landmark $1 billion US portfolio deal. The acquisition covers more than 8,100 beds across 17 properties, each tied to major universities. Reportedly, portfolio occupancy is running above 95%, underscoring robust demand for student housing despite broader market uncertainties. According to JLL, U.S. student housing transaction volume is up 38% year-to-date compared to 2024. This signals that institutional investors are leaning harder into specialized living, chasing stable yields and resilient fundamentals as traditional sectors face more scrutiny. Zooming out, we see capital flows accelerating into digital infrastructure. CoreWeave, a cloud infrastructure firm, has announced a staggering $50 billion investment plan to massively expand its U.S. data center footprint. The company aims to add at least 20 new facilities by 2027, focusing on both primary and secondary markets. This expansion will absorb over 2 gigawatts of power and generate 2,500 construction jobs. JLL reports a 27% year-over-year increase in hyperscale leasing, reinforcing data centers as a critical driver of the next CRE cycle. For operators, this marks a secular shift. Power, connectivity, and zoning are now as important as location. Shifting to retail, Phoenix is bucking the national downturn in investment activity. Retail trades in Phoenix reached $540 million in Q3, up 7% from the prior quarter, even as national volumes slipped 12% according to CBRE. The Phoenix market stands out for its defensive positioning, even as capital flows diverge sharply across U.S. metros. Our take is that $50 billion CoreWeave's U.S. data center commitment, signaling the scale and velocity of digital infrastructure capital flows. And institutional capital is moving decisively into specialized sectors, from student housing to digital infrastructure, where cash flows are sticky and demand is structurally resilient. And watch lending spreads and cap rate movements in Sunbelt retail markets as early signs of construction cost inflation in digital infrastructure projects. Check for the full analysis at CRE360.ai.